As a financial advisor, my biggest responsibility is to help my clients make the right investment choices. I learned about INR bonds through other investment advisors. Now, with INR bonds, buying and investing in bonds for my clients is quick and easy. With my guidance on bonds, my clients are happy and I'm getting new business every day. Register as a financial advisor on inrbonds.com to help your clients invest and save better through bonds.
Hi, welcome to Aina Bonds weekly newsletter Search for Yields. I am Nikhil. In today's topic, I'll be discussing with you about where are returns coming from fixed income instruments. Before we go to the topic, let's go back what happened 2 years ago and what's the current situation. 2 years ago, when COVID has struck, all the global economies were in deep crisis, and the central banks of the world have reduced the interest rates to all-time lows, which caused the yields to fall sharply, and all the investors had to look at longer end maturity bonds in order to get much better yields. However, now the current scenarios are very different, where there are inflation risk is high, and due to which central banks are raising interest rates very sharply, and which is causing the shorter end maturity bonds. The yields are moving much faster than the longer end maturity bonds. And the currently, if you check out our Ready Reckoner, which has the shorter maturity and medium term maturity and longer term maturity bonds, you can compare the yields. Very evidently that longer end maturity bonds are not quite offering a great yields for the investors, and which is why in one of our previous edition of Search for Yields, we mentioned that retail investors should stay away from the longer end maturity bonds, given that the longer end maturity bonds are not accurately pricing in the inflation risk. Coming to the shorter end maturity bonds, which is under 1 year, if you see the traditional fixed income products like corporate FDs or bank FDs are offering around 4.5, and whereas the corporate FDs are offering around about 6%. So even equally, if you see the 1 year bonds with the lower than 1 year maturity are offering much better yields with almost the same riskiness if you take in corporate FD. Given the bond platforms like us, INR bonds are offering you the best bond prices available, where you can come and use our RFQ platform and place your bids and offers, and we will circulate your bids and offers to the market participants. And if any counterparty wants to match your bid or offer, the system will automatically match it, and you'll be notified about it. Use our RFQ platform, and as well as check out for retail investor, you can check out our QuickInvest platform, where you can access our curated list of bonds, which are curated as per the current market dynamics of rising inflation and rising interest rates. And coming to the medium-term bonds, medium-term maturity bonds, that's over and above from anything about 3 to 5 years. From the latest IPOs like HDFC and SBI have raised money through perps, 5 year perps. HDFC closed in at 7.85, and whereas SBI raised 7,000 crores at 7.75%, which is the lowest yield for any bank in this year, which raised money through perps. If we compare the longer end maturity bonds for the perps, Tata Motor Finance issued perps this year over and above around 9.85%. And given that the spread between the any bond like SBI perp and Tata Motors perp, the spread is around 200 basis points in this market. And if you compare with the GSEC is at 7.13%, and these perps are trading about 300 basis points, Tata Motor Finance perps. And in the medium term corporate bonds, if we see the bonds with a much stronger backing of a parent company are trading at AA bonds are trading at 8.5%, and A-rated bonds are trading above 9.5% to 11% kind of a range. In the shorter end, the corporate bonds AA are close to 8% and 8.2% kind of a range, and AAA rated are trading at 6.5 to 7% kind of a range. You can check out our order book, which gets updated every day on daily basis. Access our order books and use our various tools to filter out the bonds which you want, and use our internal risk score, which is calculated on various factors. Use it to understand the credit riskiness of the issuer. And you can also use our reckoner table to compare the yields across the different maturities and what kind of products, fixed income products are offering, and you can narrow down your products. You can narrow down to your which product you want to invest. We also have you can also think about various approaches like barbell and laddering approaches, which will benefit you during such interest rate hike cycle. And you can once the your funds are redeemed, you can reinvest the money at much better levels after 1 2 years down the line. Thank you for listening in. Do subscribe to our YouTube channel if you're not done so. Thank you.